What's happening, everybody? Happy Friday. Welcome back to the final hour session. Let's have a little conversation today about trading through anything. Um, I don't think this market is easy. I think what we've been seeing for the last couple of weeks, we are now, tail of the tape for the final hour here. I have one trade running for daily profit play that will expire in 57 minutes and should be looking good for full profit. Nice little P&L swing on the day, back to 60K for the year, up 100 grand today. A lot of option positions working in the background. That's pretty decent swing for me. Up 100 grand. That's what the nice thing is my gains are bigger than the drawdowns I've seen over the last couple of weeks with these things pulling back. 100K. So about a 3% swing to the upside today. So again, looks like big numbers, but it's just a percentage. But I have a trade running to the end of the day. It's right here. Should be trading for about 50 bucks. Let me put this in as a BWB for Broken Wing Butterfly. And it is the 14th. So 1, 2, 3. Pulled in 65 cents, is trading at 65 cents. I can close it now, but if I close it for full, pretty sure the broker is going to say, you're going to have to pay 5 cents debit for that. And I don't want to, so I'm not going to. So I'm going to let it go all the way and just let it expire. Current price is, let's flip this around. Current price is 56.27. This was a trade all the way down to 54.95 for my pin price. So it's unlikely for the next 56 minutes we're going to drop 130 points. Anything's possible, but highly unlikely. So it's been a nice little feel for the day to have this market recover. Off the recent lows, we're sitting around 2.26% off the lows. It's nice to have a 2.26% swing off the lows, and I'm up 3.3% in my accounts. Feels pretty good. Technically speaking, where are we at? Still looking at the big picture, cautiously optimistic. Still trading with quite a bit of caution. My concern is that here's a really simple fib. We've talked about this pretty much all week. The low is in from Wednesday. We still end up tapping lows on, Thursday. Low was put on Thursday. We still had this is kind of a wild week, right? Put in the low Thursday, violent day on Wednesday, pretty violent day, and a fresh low on Tuesday. Monday was like the ugly day. That's where we started to see some of the market breadth getting a little wild. There's a couple things I've posted here in Telegram and in Discord. Just going through, I've got some interesting tidbits here. This is from Charlie Bolello, a fellow that I follow from Creative Planning. S&P Performance, let me just zoom in here. So S&P Performance, actually it's easier if I just show you it this way. Let's go here. So if you can see this, what this is the S&P 500 for the first 48 trading days of the year. This goes back to 1928. So we have had 17 other years with a worse start than now. So of those 17 years that started off worse than this year, 10 of the 17, 10 of 17 worse starts still finished positive on the year. Positive. So, is it a slight edge to the upside? Sure. Cautiously optimistic? Sure. Is that an edge that's good enough to trade? Sure. 10 out of 17, almost 59% of the time the market's finished at fresh highs and gains for the year, but certainly not a guarantee. I don't think that this low is necessarily in. I don't think the max pullback has been, 10, 11, 12%, 13% or so for the NASDAQ. This is why I'm a bit more cautious. I think that the market, I've talked a lot about this in a lot of live sessions, so it feels like repeat for me, but I think it's just important that we continue to communicate this. So having this level, pull back. The important levels, just look at some of these basic retracement levels. 23% level, 30% level. I think my biggest concern right now going into next week, if you're looking at this from a technical standpoint, is if we come into the 200 moving average and we fail at that 200 moving average, that's a concern. That's probably my biggest concern as far as the bears being more aggressive here is if they have this little tiny pullback, find this what was a very supportive line for a long time. You can see how well this 200 moving average supports the market, right? When we had a bull market established back here post COVID, it was dynamic support multiple times throughout the entire year on top of all the other moving averages as well. And then once we started to see a correction in bear market in 2022, this is an important level, right? We closed below the 200 and it got back above it, closed below it, got back above it. It wasn't an easy environment to trade. But once we ultimately cleared that level, we were down to some fresh lows multiple times for the year. So that was 2022. But COVID, kind of the anomaly where we had that nasty crash, came all the way back up to it, and it really just stayed there for the entire run into the deleveraging that occurred in late 2021 or early 2022. Same thing here. Once we got out of the bear market in 2022, we get above the 200 moving average. We start making lows and higher lows and higher lows. It just remained a very nice supported level, and it continues to be that way. So having it close below the 200 moving average for the first time in a while, it's been 300 plus bars. I've been talking about that for the start of the entire year. I'm cautious on the markets because of that bar count, because of the time it spent away from it, plus the time distance away from it. That bar count was officially 334 bars. This is also why I posted a trade yesterday on gold futures. I'm taking the same idea where we have 350, 360 bars away from the 200 moving average on top of a percentage away. Gold has put in a bit of a indecision candle today. I think that trade is going to work out fine. There's a potential profit trap if we would have to go up like 23% above the 200 moving average for that gold futures trade to not be profitable. So I think the trade is going to be fine. But point is, this would be my concern going to next week. The major news on the calendar for next week is going to be the Fed on Wednesday. That's really the only key data that I see. So let's go to next week. We have core retail sales for the U.S. This will be an important one to watch. I really think that all U.S. data is going to be somewhat important right now. The market's going to be pretty sensitive to it. Today, for example, the U of M sentiment. So we have U of M consumer sentiment came in negative. We had a negative revision from 67.8 to 64.7. Market still finished higher today. The inflation expectations, I don't know where they're getting these numbers from. I'm not going to lie, like that's big, right? You look at where this thing has been. Inflation expectations, I mean, these are way the heck up there. So I don't know how far out they're going on these expectations, but it says the next 12 months. So you mean to tell me that during the next 12 months, we're looking at just this monster push in inflation? Now, maybe this has something to do with PMI numbers coming in. Maybe this has something to do with this inventory hoarding, essentially, in case there is tariffs, and the companies experience uncertainty in tariffs, and they want to make sure they have inventory on hand. So this isn't a repeat of money chasing too few goods, and there's no inventory. But these seem pretty high as far as inflation expectations when you look at a true inflation reading that is more real-time based. And, we've had this dramatic decrease in real-time inflation. So we are coming off these lows a little bit, but I mean, again, it's like that just seems a little high, if you ask me. Like we're coming back into levels that this expectation is all the way back to where we saw the peak inflation fears in 2022. So not sure what the old University of Michigan is doing there, but that seems like a pretty high expectation. So it is what it is. Maybe they're spot on and they're geniuses. I don't know. Just ask them. Ask anybody that goes to University of Michigan; they'll tell you. Okay, and then classic Donald Trump speaks today. I don't know what he's going to say. Department of Justice. He's literally on the economic calendar more days than he's not. This is what you signed up for. This is the president that wants to be seen and heard every single day. Whether it's a pat on the back or the blame game, it's sound bites, it's content, it's media, it's what every day is going to be like for the next 4 years. So anyway, we'll see. But all that being said, technically speaking, next week we do have the Fed. So go into data next week. We have retail sales for the U.S. early in the week. That's going to be Monday morning at 8:30. Is the consumer a little bit more price conscious now? Yes. Are retail sales good or bad? We'll find out. The staggering stats here is about 20% of your top earners, or the top 20% of earners in the U.S. are spending about 60% of all purchases. So the majority of purchases are being controlled by the top 10, top 20%, just because they still have the purchasing power. They typically have assets like investments. They typically, own their homes, and they've got some discretionary funds because the market's been, investor friendly. But if that top demographic is scaling back, we could see a suffering in retail sales. I know there's been more cautious guidance going forward. Walmart has said it, which is why Walmart started to turn so hard. Costco has said it; it turned really hard. Nike, I just took some profits on Nike today with a couple cash secured puts. They have earnings next week, which I didn't want to sit in front of just in case it pushes on lower. So I'm kind of getting out of the retail segment right now. I'm not adding a bunch of exposure. We have inflation news out of Canada next week on Tuesday. A lot of low impact there. We got BOJ looking to keep rates the same again at that 0.5%. We have a press conference there Tuesday to Wednesday. We have the Fed expecting to still maintain a pause. That's still the baked in probability, like 97%. The Fed doesn't do anything, but the press conference will be pretty important to watch. Digesting Powell's statement, language, Q&A, and watching price action, which to me is the most important thing. I've seen him say the most upbeat, positive things, and the market goes down. I've seen him say the crappiest, most hawkish things, and the market goes up. So it's not really what he says. It's more how does price react. And from that 2 p.m. to 4 p.m. window on Wednesday, that's going to be one of the major catalysts for the week. We have Super Thursday out of the Eurozone. So Great British Pound has employment news. Swiss National Bank looking to cut rates again. Oh, baby. Oh, speaking of that, let me actually throw in a couple more positions here. Aussie Swiss. I'm gonna put in some levels here on Aussie Swiss. So I have a bunch of trades running on my Tasty FX account. What I'm looking at is if I buy here, buy here, buy here, I'm going to stack up some more orders to the upside. I think we can get back to this area on Aussie Swiss. I think we can get back into this area in Aussie Swiss. And I'm going to be adding in some more positions. So I'm already long, and I have been long. This is now a 2-year journey for me. Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss. I was long. That one closed out. When the Dollar Swiss hit 9,200, I closed out profit, and I'm waiting on that one. I'm still long in the other currencies. So I'm going to add in some more exposure on these Swiss pairs before the close today. And I'm looking at. I mean, I didn't know that the Swiss National Bank was looking to cut rates again, and this makes me totally happy. I'm hoping this is the case. This creates a bit more of the carry trade. We'll see how many more rate cuts the market is looking at. So Bank of England still looking to hold rates now at 4.5. Bank of I'm trying to think here. Let's go to CB rates. CB rates. Australia recently, their most recent decision was a 25 basis points cut back in February. Canada, they are all the way down from 5% down to 2.75. They continue to cut. Their last cut was March 12th. Is that right? Was that this week? I didn't even notice. Bank of Canada cut rates this week by 25 basis points, so they're down to 2.75. Eurozone trading at 2.5%. They've cut again also in March. They've went from like a 4.25 or 4.5. I can't remember where their high was, but they were up to like 4.25, 4.5, and they've cut all the way back down to 2.5. New Zealand has also cut from 5+% down to 3.75. Their last cut was in February. And the UK, they had a 25 basis points cut. I think they've also cut from around 5% down to 4.5. And then, of course, the U.S. Sitting currently at 4.25 to 4.5 with their last cut in December of 2024. That was a September. What was it? September, October, November, December? Is that right? No, they cut 100 basis points. So 50 in September, and then was it November, December? I think that's what it was. 50 basis points in September, and then November, December with a 25 that they cut. It doesn't matter. They cut 100 basis points in 2024, and they just stacked it up late in the year. Now the Fed is looking at 3 more cuts this year. We might hear some information out of Powell on Wednesday. Whether that stays true, whether he explicitly says it or not, remains to be seen. He probably won't. He probably won't explicitly say we're going to cut 3 times this year. It's going to be that like very crafty language of, based on this data, we might cut, we might not, blah, blah, blah. Like I said, price action is going to be the most important thing to watch. Two hole-in-ones at TPC Sawgrass in 17. Was it in the same group, or is it just for the day? Current market pullback due to tariffs. What's happening in 2022? That 2022 was a deleveraging. 2022 was a deleveraging. We essentially had the COVID stimulus lasted through 2020 and 2021. 2022 was facing the reality of rate hikes by the Fed as we went from basically 0% all the way to 2.5, 3%. The Fed was raising rates like crazy through 2022 into 2023 and 4. In anticipation of that, it was a massive deleveraging. So I mean, there are some parallels to 2022 because this year's market, you go into all-time highs. You've got a super high concentrated market with all-time bullish sentiment. Everyone's excited about Trump and the new administration coming in, but you've got 10 stocks essentially weighting 34% of the S&P and the Nasdaq, which is insane. Top 10 stocks controlled way too much of the overall market cap, and it was just a needed rebalancing. So the couple indicators that I'm watching have been it's right here. I've got it in this watch list. So going into how many stocks are above their 50-day moving average. This is kind of my market breadth, which is why I don't necessarily think the markets are necessarily at the lows yet. I think the indexes might be close. I think the Mag 7 might have been beat up enough to kind of stabilize. But out of 2022, Mag 7 led the way out of it. In 2025, if Mag 7 doesn't really lead us out of anything good, but it's still stable, it really depends. I mean, if the market looks at it like, well, hey, Amazon is a great stock, one of the biggest retailers in the world, is down 21%, that's a pretty good deal. Google is down 20+%. So I mean, the overall market, this to me historically has been a really good indicator where if everyone is super bearish and everyone is super extreme, and we're sitting here with a majority of the stocks below the 50 moving average, it's a good timing indicator. When you look back in time here, this is like the bottom in 2023 after a August September pullback. There was a great timing indicator right there back in 2023 to rip through that Q4, which did carry on through most of 2024 until April. You had a great timing indicator back here in September of 2022 when the market essentially bottomed. We bottomed out in September. We had a nice little rip on October to December 2022 to get us out of that bear market. Again, in June, not a bad spot. We saw some kind of bottoming patterns. It was a little bit more pain to the downside, but kind of a divergence low. You go back even further, now you're talking COVID lows. You go back even further, you're talking Volmageddon. You go back any further, you're talking, Volmageddon in 2018. So, I mean, again, I don't know if we get there, but if we do, this is where I want to make sure I have cash at the ready. So this is an opportunity to say, okay, I like buying stocks here, right? I mean, that to me is a good timing indicator. Now, the problem, of course, is, that might be a great timing indicator, but are we going to be buying into the market's flush down, we buy into a little short-term rally, and then the market's going to flush lower? That I don't know, right? And that might be something like this where we come down and revisit it again. But could it be where the overall market is down even lower than before? Yes, no, maybe. So what I'm saying is market breadth wise, there might be still some more pain to the downside. And I'm just having this very long-winded answer on what I'm actually looking to do, which is right now, the technicals are pretty simple. Fed is next week. That's really the only major catalyst that I see for the U.S. markets. We have retail sales. Okay, fine. But technically speaking, my concern next week is that we don't do anything good above this 30% pullback level or this 200 moving average now becoming resistance. I think if the market's going to be able to kind of take a big breath of fresh air, I think that the market has to be above the 200 moving average and start getting back into this like 38 or maybe even a 50% pullback zone. If that is the rally that we see over the next couple of weeks, that would be welcomed, I'm sure, with open arms. But you can see why I'm still cautious moving forward, because that pullback would be faced with a lot of support becoming resistance. Okay. And I could see the market, chopping around it here, or we could also be facing what would be hard to want to see. Would that be another fresh low? But if the market is going to say, okay, here's a high, here's a low, there's still some uncertainty around tariffs, but it doesn't necessarily look to be any worse. Maybe we get lucky, right? My concern is that we have a dead cat bounce that finds immediate resistance, and this market just flushes it right back down. And again, either this is a test of the lows in an ugly, ugly, ugly positioning cycle, or we are in a free fall below this outer trend line. So am I concerned? Yes. I want to make sure that if this happens, I'm not going to be beat up too badly in my accounts. If this happens, well, obviously that's a lot easier. So, as I said in Telegram, plan for the best, prepare for the worst. The best would be we get a pullback into this area. I like that window for, as I've said all week long, this would be my de-risking window. So whatever trades I'm in that I don't really love right now, I'd like to be minimizing some of the pain. And a lot of it's just like open options position, right? A lot of it's just, I mean, it's fluctuation. Like I've got trades that are running. Option prices have changed all over the place. We had this monster IV swell over the last few weeks. Indexes went from like 20 IV into, almost 70 IV in the last 3 weeks. So this decline has seen a huge balloon in IV. The VIX is coming down, but my concern on the VIX is that we are not in contango yet. We are still in backwardation, which tells me that this may still be pricing in more short-term uncertainty before the market is ready to kind of have that kind of true bottom. Okay, and this happened again back in. This was crazy, but back in July, this was happening in July, and then in August it got really bad, and then it looked like this, even though the market did rip up pretty aggressively in September. And then October, November through the election was fine. So, but it's not the perfect timing indicator. But as far as like looking at volatility and the coast is clear, you want to be making sure that you're looking at kind of this upward sloping VIX term structure, so you're in contango. And that means that it's like, yes, it would make sense that the higher premiums on VIX would be out in time when there's more uncertainty in the future, as opposed to more uncertainty right now in the present. Okay, so this can be a tough situation where everything right now is so short term, is so uncertain, but that's also a good spot to be deploying some cash and also selling some premium. Studies have shown that it's very straightforward. I did deploy a lot of sell premiums these last couple of weeks as the market's been dropping. I've continued to grind and trade through this. I think this week, 27 winners out of 28 trades, collecting some income, just getting out of some trades. I'm still looking at a chunk of trades to de-risk if we come up to the levels I'm watching. So, couple levels to watch. I'll point the numbers out. This Fibonacci from high to low, it's looking at some pullback levels, 5,700. Around the 5,700 and this EMA, which is now a daily 200 EMA, around the 5,700 mark. If price can get above it, that's a good thing. Because if price gets above it, then we can put in an intermediate bottom. We might even have a pullback and then another push higher. And that allows us to kind of get into like the 38 to 50% pullback zone. I do think you need to pay attention to all the structure here. There's a lot of support right there that could offer up some near-term resistance, and that's around 58 to 58.50. I said if we're lucky on a pullback, we hit like a 58 to 5,900 window. If we're really lucky, we pull back to like 6,000. But I mean, again, 6,000 would be a pleasant surprise. 5,800 would be, try to get out of some unnecessary trades or some of the exposure that I don't necessarily want, and see how those trades end up looking. I'm willing to take small wins, break evens, small losses with a move up. So, some of my services that I manage, I will be looking to manage those trades. I do have some time. I have an important line in the sand here. 560 is an important level to watch. 550 is an important level to watch. My nearest one would be, this is part of my waterfall income service. So I have a trade on SPX. This is a bull put spread that is all the way down to 55.10, which, is pretty much at this week's lows. So I think it's important that over the next week, if we continue to see a little bit more upside, that this trade gets a little bit better off. I'm only down about $700, but I don't really want to take that loss if we're going to stay above 55.10, which is this week's low. And then also I have a 53 by 52.75. That trade is still just upside down just based on option prices, but I still like the position. This one's going to close out for full profit. It's mostly these trades that I'm watching the closest. April 4th, if we stay above 559, that's a winner. March 31st, if we stay above 550. March 28th, if we stay above 550. And then some of these other trades into April, if we stay above 545, stay above 560, stay above 535, stay above 558. So it's right around these current levels that I want to see price kind of stabilize. So if we start to see this little window, this is just the same thing. So XSP, this is the mini SPX, high to low. If we pull back into some really clean retracement levels, 23%, 30%. I don't want to see the market pull back into here and then get flushed right back down. If that is the case, that means that the bears are still ready to dig in. All right. So if we start to see the market getting above this 200 moving average and above this 30% pullback level, then there's room for the 38. There's all the structure back in here that'd be around that 38 to 50% zone. I think this is where the market can breathe a little bit easier. If you've been in some positions you don't necessarily love, well, you can have a chance to get out of them. I've also been taking some short-term stabs at this. So a couple of trades like my double up alerts, if we go higher, there is a $425 winner here and a $425 winner here. If we're greater than, that has to be above 565. So above 565, I get about, what is that, $850. So not bad. And then above that, I've got some other trades. I mean, it's portfolio management. I got a lot of trades running right now. They've all been, good mechanics. I like the probabilities of them, but I want to make sure that I'm, getting some of this risk relief because I don't like the 1 to 3% swings that I've been seeing where even this, I mean, the market's up today, 2% and I'm getting like a 3+% swing. That's fine. But the same thing is happening, not necessarily to the downside. This market is down, nearly 11%. Okay. And I'm still hanging into some gains for the year. So that's good. I mean, part of it is because I came out swinging with some really nice gains early in the year and I kind of padded it up. I was also hedged to make a nice little chunk of profit as well. So considering the market's down and we're still positive, I'll take that as a win. But also I want to benefit from the upside here too. So if we get some upside and all of a sudden this can swell back up into the six-figure mark or more for gains for the year, that's good. I just want to be a little bit more aggressive in protecting them. Okay, that's a good sign too, Christian. NVIDIA going up today. NVIDIA up today. Take a look. So NVIDIA is trading at, where are we at? 120. Yeah, that's good. So I still have some exposure on NVIDIA. I have some shares. I've got some collars. I've got some covered calls. This one, see, I might actually, let me take a look at this. So NVIDIA, I have a ratio spread here. Ratio spread out to April. Price would be above 110. Actually, you know what? This is in profit. I think to avoid the assignment here, I want to get back some buying power since I was doing potentially owning at the 110 to be a break even of around, let's see, 105, 103, which I would be fine owning that, but I want to be a little bit more buying power conscious here. So if I got profit on this, I collected $2.26. Looks like I can close this out. I think well, we're only about 30 minutes away. I'm going to let this go further into Monday and just get into opening bell Monday. If NVIDIA is hanging out on Monday, there's also, this is, well, let me see. We're right back at the 200 moving average. There is supposed to be some type of conference next week with NVIDIA. Foxconn's positive results despite 14% declined. Zuo lowered his price target 168, highlighting upcoming developer conference. Yeah, so there's developer conference coming this coming week on NVIDIA. It might be something that's good. I don't know if investors are going to like it or not, but I do know I get some buying power back. So my 226, if I close this for like $1.50, see if I just get out of this trade right now, get some of the buying power back. $1.55. Let's see, $1.53. And this should be pretty darn liquid. $1.54. Come on, dude. 5. All right, close out for $1.55. Add another win to the mix. That is a winner on NVIDIA. Okay, let me just double check and see. NVIDIA, I'm just going to go down the list here. So April, what was that trade that I just took off? That was an April 17th, 110 by 115. So April, the 115 by 110. This is my collar trade. So this trade right here is positive. I'm going to go ahead and just close this one down. $1.55. Taking the winner. This NVIDIA trade, does not have the, oh, it does. There it is right there. So there's my April 115 by 110. Let me label this one really quickly for a ratio spread. And then I've got some other ones that are way lower. So this one here, ratio spread. Now, how the heck? Oh, okay. I got this one. Never mind. Hang on one second. Let me ungroup this. And let me ungroup this. So this one I have shares. I have the 2 sell puts at 110 and the buy put at 100. That's the ratio spread that I'm looking for. There's the ratio spread, which is up 75 bucks. And then this is my collar trade right there. Which is for my own shares. So this one ratio spread up about $79, $80. Go ahead and close this one down. 153. Just penny this up. 155 seems to be the fill that I'm getting. Was getting 156. Filled at 156. Okay, this one here, the 115 by 110. Ratio spread, it's up about $73. So I got it in for $1 or $2.25, and I'm closing out for $1.55 or so. So I'm making 70 bucks on the trade. That's fine. $1.56. Come on, fill me. Filled, no problem. Good. This one, that one's fine. This one, 135. That's a collar trade. And that one's looking good for a bull put spread. This trade, here is my ratio spread. So the 115 by 110. And then the collar trade is here. So the 115 by 10 up 70 bucks. Get out of this thing for hopefully $1.55 or less. $1.56. Come on. So I'm just under the $70 win. This one, no NVIDIA. This one, ratio spread for profit. Others are looking really good. My collar trade. This one is 92% of the covered call is already in, collecting $800 of income on that. I'll probably just sell more. This one expires next Friday, which is fine. If we have that investor conference move, and I'll hang on to it with the own shares. If it gets called away, I'm okay with it. Like my break even on NVIDIA is like low. I think it's like 110, 115. Let me double check. NVIDIA. There it is. 120.58. 120.58. So if it gets called away at 132, I make, $1,200 a share. So that's fine. All right, let me get out of this one here for $1.57. Come on, bro. Tasty. Mid price is $1.50. Come on. $1.59 mid. You freaking turds. There, $1.59 got filled. Fine. So I'm out of that trade. This one. Okay. I've got some expirations here. Take a quick peek. That is a 111 trade. No NVIDIA exposure. This one is cash only. This one, no NVIDIA exposure. This one's fine. This is a 30 wide credit spread. It's already up $238. Max profit is $318 going out to June. I don't think NVIDIA is coming back to $75 without having another giant flush to the downside. So, and if I could own NVIDIA at $75, I probably would. So I'll just keep that one in there. That should be full profit for $318 a contract. Okay, so yeah, NVIDIA is doing well, and this helps. That was a nice little buying power chunk. So now I've got $21,000 in stock buying power, about 11,000 in option buying power. That helps. And just making sure I'm maintaining buying power. I just got back up to about a third of my account, so about 33% of my accounts is all cash. That's invested in like SGov or BIL. So I'll continue to allocate that and get like a 4.1, 4.3% kicker on it if it's not being used. Okay. All right. What else we have here? Look at the 1 hour chart. Yeah, I mean, maybe it does. I'm saying, this is a chart that I see. Connect the low, connect the low, connect the low. We broke the low. You know, I'd love to see it go higher, right? If it goes higher, here's the best part. If it goes higher next week on some optimism, it is such a large company with nearly $3 trillion, it's going to move the market. So if Nvidia goes higher and there's Fed in this conference and Nvidia just makes everyone super happy again, then that optimism gets back into Mag 7, which will lift the market, which we start to see those corrector levels I'm looking at. It's a chance to de-risk. That's good. Like, all this is good. But what I don't want to do is sit there and say, like, oh, I'll just wait and see how it plays out next week and watch this thing potentially go back down and then be sitting on like, well, now I got to own it. Now I got to wait for it. So this is done. So this is closed for a 224 credit, closed for a $1.55 debit. So I'm taking the win, right? And I'm also getting back my buying power. You know, I'm sacrificing some profit here, but also I don't want to flirt with, if we come back to retest the lows, I don't really want the assignment at this time. I already have some shares. I think I have 500 shares total of NVIDIA, and I'm fine with that. Like, that's a little portfolio mix. I think it's good. The premiums are fine, but I don't need much more than that right now. And, you know, because I own those shares and they're getting called away 135, 132, you know, 135, 135. You know, I mean, I want it to get called away at a decent price. I mean, is it able to get back to like 125, 130 again? I'd love to see that. You know, that's way easier than like, oh, what about the downside? So what I am watching though is, if this thing is going to fall, I have a collar trade. I want to be protecting those downside profits. You know, and I can lower my cost base a little bit more. Okay, that's NVIDIA. What else we got? Mags, this is another one to watch. Let me just go quickly through the indexes just to give us a sense. So XSP, watch for how price dances around the 200 moving average. If we pull back to it, that's step number one. So a pullback to this is good, right? If we come back and retest the low again, I still think this kind of like maybe chops around before it starts to get up. But if we start to see this like fake rally, watch that 200 moving average, because if it acts as resistance, I'm a little concerned, right? But if you go down to a smaller time frame, you know, you never know. But if we get up to, let me see where that 200 moving average is around 5,700. So if we come back to this gap right here, okay, let's say we come back to that gap. Well, that would be getting into that 200 moving average, right? On the daily chart. If we get to this area, is this going to be a rejection, or is this market just going to freaking grind through it? If it grinds through it, awesome. You know, it's the same thing. I've got the big swing from the high to the low, right? But it's not done. Like, these bulls are not in control, not by a mile. So, yep, I agree. If Nvidia does go up, it will, and it will. It'll definitely help the market. It's a Mag 7. It's $3 trillion. It's going to move. It's going to move the market quite a bit, which is not a bad thing. Okay. Now, that being said, if the market is not liking what Nvidia has to say, and that developer conference is just crapping all over Nvidia and saying their chips are garbage and they're overpriced and there's competition, that's not going to be good. But I would hope it be a chance to stage some optimism. I think even next week with the Fed, a chance to stage some optimism, a change to kind of adjust the narrative, because all has been is uncertainty, tariffs, retaliation, tariffs. That's all it's been, you know? And then it goes into earnings compression, then it goes into jobs, and then it's all been bad. Like, everything sentiment wise has been really bad the last couple of weeks, which has been noted in price. So we'll see if the market can relief. A little relief rally would be welcomed. All right. Yeah, so that's what I'm watching on SPX. Watch that 200 moving average. You know, take that down to the SPY. Very similar structure. Can the SPY get back to the 200 moving average around 572, 573? If it can we pull back and stay there? Can we fill some gaps? This kind of 580 to 585 level would be a great kind of orderly retracement. If we can get back into there, I'd love it. Okay, equal weight. I did end up buying some more QQQE, put a penny buy in RSP and got in at 170, so that was another fill. I'm still staying equal weight right now. Even if this is high, low, lower, high, lower, low, maybe a lower, high, lower, low, like who knows? This might actually be an interesting market where the equal weight is not going to look awesome, but it may be a chance to, settle in, and then we have a broader market rally instead of like led by or led by Mag 7. But if we get a relief rally here, that's okay. If we get back to all-time highs, that's even better. But we will see. E-minis, same thing. Watch your levels. Watch your high, watch your low. Look at your fibs. You can plot it from this recent top right there at that high. There's your fib. So your 23, your 30, your 38, those retracement levels, watch your 200 moving average. And you can see in the futures market with that price action, since it's a 23-hour market, you can see a little bit cleaner structure here, right? Look at all the structure right there, right around this 5,900 handle. All these previous wick lows around 58.50 or so. That's what I'm saying. This may not be a perfect spot, but if it's in the window, the neighborhood, the ballpark of 58 to 5,900, that's a good looking spot. So is it, up for a higher low and then up into this little retracement zone? Maybe. Next week, it will be telling whether we are closing higher or not. I do think the Fed is enough of a catalyst. I think Nvidia having some news might be helpful. MES, same type of thing. Watch your high to low. So, I mean, the correlation is pretty obvious. Like all these S&P related instruments, MES is very similar. Look at all the structure in here around this 58 to 5,900 zone, and look at your fib retracements. Qs or NDX, a little bit different. Okay, again, pretty ugly flush. This was like 13 to 14% from high to low. Oops. Yeah, about 14% high to low. Is that right? Or did I exaggerate that? That is around 13.8% high to low. That was pretty good. So there's your fib. And hopefully that low will stick, right? NDX, I'll take a look at NQ for a moment as well. And pullback levels, probably in here. Watch your pullback zones. So right between the 38% and the 50%, that would be, again, if we can clear this 200 moving average, if we can clear this 30% retracement level, then there's room back on NDX to get to around 20,500 to 20,750. That is a conservative window, but that's around the 50%. So can the market find equilibrium here? If so, that's good. Okay, my bigger concern is that we go high, low, shallow retracement, and then if we have a flush lower, that 127 becomes the thing, that 1618 becomes the thing. This market might not be done for a much, much deeper correction. So I just think we have to get out of this pretty quickly. The narrative can change. We've clearly seen aggressive swings in sentiment from extremely bullish and optimistic into extremely bearish, where your AAII sentiment is, like off the charts bearish now. It's like one year bearish highs. Let's go to QQQ. Actually, let's go to futures here. Here's NQ, which, by the way, this little slide is not off the all-time highs. This actually was just a straight slide, but NQ actually all-time highs here back in December. So that all-time high, we've had about a 14.5% correction from all-time highs, but just this recent slide is still, high to low fib. So where's that pullback level? Your 30 to 38% window, right around that EMA, which is sitting around 20,250. If we pull back into this, like I'd say 20,300 or to 20,000, I guess we'll round it. I guess 20,400 to 20,800. Structure is a little bit more pronounced in here. We've got some lows, have some structure in here. That would be, to me, my generous de-risking window would be right in here. So look at like the 50% zone. If we pull back 50%, this market could then figure out, is it capable of going higher? Are the bears taking back control? But at least it shows there's a fight. We get back to 50%, there's a fight. If we get back to 30% and it flushes back down, there's not a fight. This is just a relief rally and a reload, and bears are coming back in with a vengeance, and just be prepared, be braced. It's not going to be pretty. But if we at least have a fight, we pull back to like the 38, 50% zones, I think that's more encouraging moving forward, that we could put in some, interesting lows for the year. We may not get back to highs, or maybe we do, and this thing's just going to be a freaking roller coaster ride. But we'll figure out how to grind through it. Okay, same thing on MNQ, which I did a lot of my hedging on MNQ, MES, ES. I do a lot of futures hedging. This is the same type of look as NQ. Take your fib, pull back. When I wake up in the mornings, the first thing I'm looking at is futures flow. Because if this is up, there's a good chance that knowing these technicals right now, if we see that ES is pulling back and NQ and MNQ is pulling back, then we're heading back into that little retracement zone. Okay, and that gives me confidence that I would pretty much just be trading mostly bullish for the days. The near-term days, like the next 1 or 2 weeks, if this is going higher in futures, I'm trading pretty much bullish only for SPY, QQQ, SPX, NDX, just focus on trading bullish. Because this market can come back with a bit of a vengeance. I just don't know if it has the evidence right now to do it. Right? It has other concerns. It's got other uncertainties, and who knows. All right, that's that. Dow. I did end up buying the Dow this week. I bought some DIA. I did a dollar cost average into that. So DIA, I bought at 418. Yeah, 418, and then I put on some other trades. I put in it was a 111 trade, 400 by 395 by 390. Collected $2 income. And if I'm owning it, I'd be willing to own it, but the DIA would have to drop from all-time highs. 383 would be my break even. We would have to drop 15% in the Dow. Not saying that it can't happen, but it'd have to happen by April 25th. So probability of profit in this one is pretty good. And just dragging a fib from this recent, oops, that's not what I wanted. Dragging a fib from this recent high to low. Right in here. All right. So the tell over the weekend is how next week starts. Maybe it's a little choppy on Monday coming into a Fed week. If the market claws back, we've had some really ugly Mondays, by the way. So if you go back to the daily time frame, this Monday was horrific. The Monday before that was horrific. And the Monday before that was horrific. So 3 for 3, just nasty slides, very red Mondays. That were well outside of a 1 standard deviation move. We had a big move the last couple of Mondays. So if the market is going to be pretty chill on Monday, that could be a good indication that the market is just anticipating the Fed, maybe seeing some other data, core retail sales this next week, whether it's good or bad. We'll see what the market does. Okay. What else we got going on? I'm going to let this SPX trade expire today. So out of the NVIDIA trade for profit, that is good. IBIT, this is out, nothing too pressing outside of this income trade. This one is 1111. I think we're okay on this one, out a couple more weeks to finish out the month. So it's a $67 income trade, potentially a little dollar kicker on top of that. It's up about 50% of the profit right now. But I'm going to let this one go a little bit longer. Bitcoin's had some stability, which is kind of nice to see from this rally today. Yeah, I'd like to see XSP stay above 560. I'd like to see it get up to 580 to 585, and then all these positions here, this overall P&L will start to improve dramatically, and that's a good thing. And I might still have some profit traps along the way. So anybody in my waterfall service, there's lots to watch for next week. As we mentioned this week in class on Monday, but I'll be actively monitoring and managing. Copper, this trade's almost for full profit. 143 is the open P&L, and 160 per contract is my max profit. So I'm up about 82% of that profit right now. I don't think I need to close it. This is out another 41 days. However, for me to sit around and wait for $17 of income may not be that cool. But if I don't do anything, let me just see here if I close it. What would this give me? 25, 30 bucks. I mean, ugh. It's a $32 debit out of a 160 winner. I'm going to let this one chill over the weekend. It's a little bit further out, but I'm trying to avoid some of those fees. if I can. MES, that's a hedge out for August. ES, I've got hedges out to the end of the year. So I did put on some hedges this week. This trade is a hedge. This trade is a profit for next Friday. Looking, this is good, up about $745. Max profit on this one is $9.75. So this is a nice little. This is looking good. I mean, as long as the E-mini futures stay above 5,200, I'm keeping $9.75. That's actually getting. Ooh, do I have a bonus profit in this one? Hang on a second. This trade. So it's showing 150%. How the hell is that possible? So I buy the put, sell the put, hedge, and I still collected 975 in the trade, which this should be 975 times 50. Yeah, $487, and it's showing I'm up 726. I don't know how that's possible. I mean, this is giving me a bonus credit, and maybe it's because it's a 50 wide profit trap. This is so weird though. So I took the trade in for 111. Took the trade in for 975. Hang on a second. Let me label this thing first. Group 11111. Yeah, so I took in 975 in this trade, and it's showing me that I can close for a credit right now, which is even better. This is pretty sweet. Let me see here. So let me close this thing down for a. See if I can get like a $4 credit out of this. It shows bid at 390. Yeah, it's got a 440 credit on that bad boy. Nice. That's a hedge. This one, 2, 3, 4. Group this. Okay, 1111. Same thing. Closing for. Let's see if I can get 450 credit out of this one. Sweet, another little bonus trap. That is not bad at all. This one, that's a hedge. This one, that's a hedge. That one I just closed out for a winner. This one, that's a hedge. That's a hedge. This one, good. Copper's good. That's a hedge. This account, that's a hedge. Here's another one. That's a hedge. This trade, 1111. Close. Oops, let me go group positions. Yeah, pulled in 975 and closing for hopefully a 450 credit. Let's go. Oops. 1, 2, 3, 4. Closing. Oh my gosh. Okay, 445. Nice little scream today on the market. I think we got a 2% day today. We got 4 minutes for the close. 445 credit. Let me take this down to 440. Come on, tasty. 435. Filled at 435. Quantum names, I could care less. I think it's all a bunch of hype right now. I don't think the market's ready for anything AI or anything growth. I think that trade is kind of dead until the market is more certain that it can broaden out and have a bull market ahead. Quantum is speculative right now. I'm not trading the quantum crap. I think Mag 7 is a big enough rotation. CapEx spending, it'll be interesting to see if Mag 7 continues to spend at the pace that it's spending. They certainly have the cash to do it, but at some point, investors are also questioning the effectiveness of that type of investment. So, all right, let me keep going here just to make sure. Hedges wise, that one's hedged. This account is all cash. That one is fine. And this one is hedged. Okay, so that was a freaking sweet win. 975. Yeah, that's pretty good. So that was a nice little win. I pulled in 925 credit. So 925 credit, closed out for another $4.50. That's a $687 winner with a little bonus trap on top of that. So not a bad trade. All right. That was a good little find for the end of the day. Also, more buying power, which is nice. And I will move on. Okay. So those trades. Good. For the day, we have some 2+% winners. We got 1 more minute left. SPX daily profit play is going to close out for full profit at 65 cents credit today. Nice little winner. I'm just going to go ahead and mark that in the tracker. That is nice little way to wrap up the week, and found that winner on ES as well, and then also closed out NVIDIA. So adding to the mix, that gives me 29 out of 30 winners this week. Not too shabby. So 2.18% on SPX. And here, Q is up 2.51. Not bad that they're keeping pace with each other. The Dow's up 1.65. Russell coming back as well, two and change. The volatility index, nice to see this thing retreating. I mean, the VIX is down from recent levels. It's down about 27%. You know, for any type of rally, you want to see the VIX continue to head lower. The VIX 1 day also down. Yep. I looked at a trade this weekend, SVXY, but I passed. I just didn't want to. It doesn't offer any leverage like I would typically have in my account. So anyway, all good. Yep. So we are looking a bit more promising coming into next week. Are we at the pullback levels yet? No. So Monday will be an important day. All eyes on the Fed, maybe the NVIDIA conference. But like I said, the market might have enough momentum to get up into that 200 moving average. It's there that I want to see the price reaction. Because if price reacts negatively off of that 30% retracement level or that 200 moving average, that's probably not a good sign. Unless this is going to make a higher low, that is potentially the scary zone right there. But if we have room just to keep kind of drifting, and we get back into levels of support, that's where the kind of risk relief falls. Okay. All right. But closing high for the day is good. It was almost there. It stayed pretty high. We had like just a brief pullback in the final couple of minutes, but we got up to like 563 pullback. That's a pretty vicious close though. That pulled back almost $2 in the final 5 minutes, but certainly better than where we started. That's a ridiculous day from previous close at 551. I mean, this thing's up $11 today. Open arms. So nice way to go into the weekend. All right, I'm going to let you go. I have another class, new class, first time running it. We're going Project Options Edge for 4 p.m. So I'm going to jump into that, and have a great weekend. I'll see you next week back here on Monday. All right, thanks everybody. Take care. Bye.